Hey, this is Paul Johnson coming to you with a couple observations we've made over the last 20 years. VA buyers are our favorite client to work with. The loan is so creative, it offers so many options. And something that I'm seeing right now is that a lot of folks that are seeing different things on the internet or different ads, or they're getting kind of a generic pre-packaged VA deal and they're not getting it fully customized to best utilize for them, to set them up for success, to have financial momentum going into the purchase of a home. So I'm going to give you the three biggest mistakes that we observed. And really, what we do, we give you a step-by-step breakdown of how to customize the plan to fit your needs. So number one, putting too much money down. On a VA loan, it's a zero down loan. A lot of times I've noticed that people think they have to put money down or more than they need to, and there's other things in the financial picture that should be considered before a down payment. Why is that, you might ask? Every $10,000 you put down only saves you $50 to $60 a month on your mortgage payment. Now, think about some other things that if you apply $10,000 towards might save you $200, $300, $400 a month. So that's number one. Number two, paying too many fees. So majority of the banks and advertisers will show you a loan that has the lowest possible rate but has higher fees on it. For example, points. A lot of them, and fill in the blank, military credit union, have a set fee that's right up front, that's in the loan. Here's the problem with that. When you pay a point, you're basically prepaying interest to the bank. But when you do the math, a lot of times clients are not even getting their money back for 8, 10, even 12 years sometimes. Because when you prepay a point, it's not saving you a considerable amount on your monthly payment. So it's always wise to analyze that. If one point is saving you $60 a month and you have a $500,000 loan, that's only $720 a year, but one point is $5,000. So do the math on it. Does it make sense? Is that a good ROI on your money? Are you happy with that? Or are we just taking that prepackaged loan that the bank's advertising? Number three, misnegotiating opportunities. The VA loan allows you to negotiate with the seller. Now, in some markets, I understand that negotiating with a seller can be tricky because of the low inventory. But there's small things that you can ask for. There's big things that you can ask for. We've even had a client in the past who paid off a truck to qualify. The seller paid that truck off. The seller is allowed to pay debt off for a VA transaction to help the military home buyer qualify. So there's one huge opportunity there that a lot of times is missed, where we're saying, hey, look, maybe you do have $10,000, $15,000 saved up, but let's get the seller to pay $5,000. Let's get the lender to kick in $5,000. And one, we can keep a good savings account in place for a rainy day, or those just life happens. Tires, kids got to go to the doctor. There's things happen, right? So there's one opportunity there. The other one is, again, looking at the debt. Now you might say, why isn't the bank just making these suggestions to me? The bank's often holding those credit cards that you're paying 18, 25, 28% interest on. So it's not in their best interest to recommend that you eliminate that debt. But that's probably the number one mistake that I see with VA home buyers is the money going into the wrong place. So if you would like a personalized consultation that looks at your short-term and long-term goals, I'd be happy to connect with you. I look forward to talking to you soon. This is Paul Johnson. Have a great day.